Hello and welcome back to the Rekt Capital channel, and welcome to today's video about Bitcoin and the market leaders. Is this correction truly underway? We are seeing some signs, and of course from yesterday things have been playing out perfectly. So let's dive right into the video. But of course, before we do, I'd like to share that I am hosting a giveaway of my risk management course, which is $97, but you guys can get it for free. It is $97, like I said, 9 ratings, 5-star ratings, so I'm super proud of that because of course I am all about sharing quality content with you guys. And here's what you can learn from the cryptocurrency risk management course: how to time your exposure to altcoins, how to predict when to sell and when to buy them, how to de-risk from altcoins, because a lot of technical analysis comes into play here, but truly understanding how to manage your risk on, risk off, these are fundamentally important things for you to perform well in the market, whether that's Bitcoin or even altcoins. So in this course I share a lot about my own personal risk management strategies, how I conduct my trades through the lens of risk management, and I share practical examples, my own trades in that course. And this giveaway will be available to only 5 people, so it is first come, first served, but it is made possible by eToro, the #1 social trading app for crypto, where you can connect with traders from across the globe, copy their trades, share ideas, and trade cryptocurrencies. So to take part in the giveaway, it is only available for US residents only at the moment, but visit the eToro link in the description down below, create an eToro account via the link, deposit only $50 to your new eToro account, and make a purchase of any of the cryptocurrencies they list, and just DM me a verification of this transaction and I'll give you a 100% discount code for the free risk management course. That will be my giveaway. This giveaway is only for 5 courses, so it is first come, first served. So make the most of this opportunity. Of course, the risk management course is $97 usually, and when you deposit your $50 onto your eToro account, you can buy any of the cryptocurrencies they list there and just sell them the next moment if you wish at a small profit. And just by doing that, you get my risk management course, which is worth $97 for free. It's a fantastic offer, and I'd like to thank eToro for making this all possible. But without further ado, let's dive right into today's market update. So since yesterday, we've seen a pullback, we've seen a rejection from this supply zone 7,250, a supply zone that we've been watching for 6 straight weeks right now, and it is quite abnormal to see upside candles in a row. It's quite unsustainable price action whenever we see candles like this ascending for weeks at a time with no real pullback in the form of a actual red weekly candle. And this is the first weekly candle that we're actually seeing in the red for the first time in 6 weeks. So this is a healthy development in price action, and just seeing this rejection from here confirms the suspicions that we had yesterday about these FOMO wicks, this extreme emotion becoming less extreme. And it's exactly this sort of extreme emotion that you need at these times when price is at a significant resistance. You need that extreme emotion to press price up and break past a very strong resistance. And we didn't get that strong breakout because we didn't get those strong emotions. And in fact, we are seeing other strong emotions, and that's just profit taking and panic selling, wherever the case may be. So this rejection has occurred, and of course this does tie in with the fact that this FOMO has gotten less extreme over time, and it's this extreme FOMO that is needed to force a breakout past this level. So this is the chart from yesterday, and right over here you can see how things have changed. We've seen a strong rejection since yesterday, and this just confirms to us that price action is a historical story of fear and greed, and embedded in the candlesticks are human emotions. And if we read the price action, we read the psychological emotions that are embedded in the price action. And yesterday's psychological story was all about a lack of that extreme emotion, that extreme FOMO, and that's why we're seeing the downside from today. And in yesterday's video, I also presented to you guys an inverted chart, and this is essentially showcasing to us a different psychology where we're just seeing these wicks showcasing to us a slowing in the sell side momentum. Should this have been a demand zone? Of course, if we invert the chart and just turn it upside down, it does look like we're seeing a slowing in the sell side momentum and accumulation right over here. And this accumulation has already translated into a bit of a rally, of course, towards the upside. But of course, since this is an inverted chart, then this is just a rejection. But this psychology is also correct. It's very good to see that psychological story playing out, where we're just seeing a curling up and cupping in the price action. Whether this turns into a full-blown reversal remains to be seen. 6,400 will be quite an important region to see if we see that full-blown reversal. But until then, so far so good in terms of what we've been speaking about yesterday. But this also ties in with a historical tendency that we tend to see in a data science model. So I'm just going to quickly hover to the data science model, the 2-year moving average multiplier. Every time we see price dip below the green line, we have an area of outsized return for potential Bitcoin investors. Every time we see a dip below the green line, and this green line is the 2-year moving average, and it is very important because it will be that very important level for directional bias. So once we see a breakout past the 2-year moving average right over here, then we'll probably see a new bull market emerge. But of course, we have to bear in mind that there could be a fake out to around 7,600, and then we'll see a breakdown once again. So in any case, it is really important to just confirm a return above the 2-year moving average if we really want to become bullish about Bitcoin. But at the moment, of course, we are seeing rejection from this 2-year moving average, and this is best evidenced on this chart right over here. It is a historical tendency that we tend to see in the data science model that I've just discussed. We tend to see a rally after a breakdown. So a breakdown happens past the 2-year moving average, which is represented by this black line over here. We see a breakdown, a very strong breakdown, a rally to just test this level as a new resistance, and then we see another rally, or at least another breakdown to lower levels. And just based on this historical tendency, so far we are seeing all of these checkboxes being checked. The breakdown has happened, the rally towards this resistance has happened, and it looks like this resistance isn't budging at the moment, and we're actually seeing rejection in this candle right over here for the first time in 6 weeks. And just based on these historical tendencies in the data science model, I do expect another major low. I don't think we're going to see 3,000 again, but we could see another major low. At the same time, we can see that there is some wicking past this 7,200 level. So even if the bulls really have that last resort and they try to push price to around 7,600 or whatever the case may be, that could end up as a wick on the weekly chart. And that's just something to bear in mind, because many people are going to FOMO once we see some sort of price action past 7,250. So very important to bear that in mind, because we could easily see a wick even if there would be a moment of bullishness. However short term, however short lived, it could happen at around this resistance. We've seen it happen already, so it could happen again. But in any case, it does look like Bitcoin is primed to reject from here a little bit further, just to see another major low come in later on. That's my bias at the moment, and so far so good. We are seeing this rejection. I'll keep you guys updated as we progress, but in any case, this is the situation for Bitcoin. Let's move on to Ethereum USD. I was talking about how we are at this blue diagonal resistance for Ethereum on the weekly chart, and we've seen a weekly close above the blue diagonal resistance, and all I'm looking for right now is for this resistance to turn into a new support, and at the moment we're not seeing that. And in fact, we might be seeing this blue diagonal resistance despite a weekly close and a daily close above here as well. We are seeing this candle right over here. We are seeing this candle over here actually testing this blue diagonal as a new resistance once again. So it's very important to see how this daily candle behaves relative to this resistance, because if it closes below it, we could see bearish continuation towards the downside. But ultimately, all I'm looking for is this weekly close, this red candle, to close above the blue diagonal. So if it does that, then Ethereum is still quite well positioned to continue towards the upside. But it's all about Bitcoin. Just like I was mentioning yesterday, Ethereum and Litecoin can be well positioned technically speaking, but if Bitcoin's going to reject, then these technical situations, these technical price developments for Ethereum and Litecoin and other altcoins, they're just going to dissipate. We're going to see breakdowns across the board in altcoins whenever Bitcoin moves strongly towards the downside. And we saw that initial rejection from Bitcoin, and already we're seeing a lot of volatility in Ethereum and also in Litecoin. But Litecoin is doing a little bit better because it's still holding that $40.80 level, which is something that I'm really watching for, because if we continue to see price strength confirmation over here, an uptrend for Litecoin is quite likely. But then again, we need to see strength in Bitcoin first, and at the moment there isn't a lot of that strength at the moment. So that's something that we have to be cautious about. Risk-seeking behavior in putting on risk in altcoin exposure isn't a good idea when we have a lot of uncertainty about Bitcoin's price action. So it's very important to tread carefully, and that's why I was treading carefully with Link. Yesterday I spoke about how we reached this target area right over here. This was my target area for Link. Fantastic rejection afterwards, so that was a fantastic trade. I wasn't taking any new positions. Like I mentioned yesterday, that was something I was very cautious about, and I was right to be cautious, because not only was I right about this target area, but I was also right about the rejection that ensued. And now we're just seeing this supply zone becoming tested for a new support. And again, if Bitcoin manages some more downside, then Link is also going to struggle. So as long as Bitcoin maintains its highs over here, then altcoins can do quite well, because they are positioning themselves quite well. This supply zone could turn into a new demand zone for Link, and we could see further upside from here, but it's all about Bitcoin. I'm going to be very cautious at this level right here. Same thing for Tezos, something we spoke about yesterday. I mentioned how this level has become a resistance, and we only saw the initial, very small initial rejection from this resistance, but this rejection has ballooned since yesterday. So we were also right to be very cautious at this resistance, as is a very good habit anyway to be cautious at resistance. But once again, very much like Ethereum, very much like Litecoin and Link as well, we have returned to a point where this could potentially become a new support. This black diagonal was a breakout point, a previous resistance, and now we're testing this level as a potential new support. So if Bitcoin holds, then we could see further upside, some bounces in Litecoin, in Ethereum, in Link, and in Tezos, but it's all about Bitcoin. And if the Bitcoin correction truly does continue, then we will see market-wide shedding of valuations in altcoins as well. But as long as Bitcoin manages to hold and just stop its rejection for a moment, then we could see some bounces. No full-blown trend reversals for Link or Tezos, because these altcoins are quite exhausted. They have had a very strong run up so far. Of course, if Tezos makes it above this red level over here, then a revisit towards this red box is quite likely, but they are running out of room to maneuver towards the upside. Perhaps an extra 10, maybe 15% at most, but the most upside that can happen is for coins, large caps really, like Litecoin, like Ethereum, but they need to hold their technical price positioning, and Bitcoin needs to behave for that to happen. And at the moment there is quite a bit of uncertainty about Bitcoin, so there is even more risk associated with taking on more altcoin exposure. That being said, that's about it for today's video. I hope you've enjoyed the video. Please consider dropping a like if you enjoyed the video, and of course subscribe for more videos like this in the future. I'm more than happy to be producing this content on a daily basis, so as long as you find value in this information. So please consider dropping a like, subscribe for more videos like this in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak soon.